Brigade Enterprises. The focus on leasing portfolio has impressed Motilal Oswal. The brokerage firm has initiated coverage on the stock with a price target of 282. And Motilal Oswal expects a substantial rise in the leasing area for the company to much as 6.2 million square feet by FY22, and it will take perhaps Brigade Enterprises to newer levels with that. So let's bring in the CFO of the company, Atul Goyal, who is in conversation with us. Mr. Goyal, good afternoon, and thank you so much for taking the time out. Let me just ask you a little more and prod you a little more about the leasing business. Where are we today, and what are the expectations going forward?
See, we are at 2.5 million square feet as of now, and we expect to go to around 10 million by 21-22. So around 5.5 million square feet is already under construction. First phase of which will get completed in March 19, and rest by quarter 3 19. And then there is a 2 million of twin towers, which we call, which is also the construction is starting, and it should also complete in 3 years' time.
Okay, and Mr. Goyal, if you could also tell us about what geographies will this cover?
Yeah, see, major 3.5 million is in Bangalore, and 2 million is in Chennai, and again 2 million, which is twin towers, is also coming in Bangalore. So 5.5 million is coming in Bangalore, and 2 million around in Chennai.
Okay. And if you could also tell us about how your residential business is currently, and if you're seeing a pickup, if at all, because as we know, the industry so far has been under quite some pressure with respect to this segment.
Yeah. See, residential has been going good. We had good sales in half yearly, and we expect the same run rate to continue. We are looking good demand in affordable housing, and that's where our major launches are being. So sub 1 crore, there is a good demand, and we hope that run rate will continue in that space.
All right, Mr. Goyal, can you also give us your status check on your hospitality business? Again, the note mentions that there is some expansion on the cards. What more can you tell us about this?
See, we already have around 780 to 780 rooms, which is already operational. And we are building around 500, 600 keys, which we have been built, and around, so we aspire to go by 122 to 2,000 keys. So that is what the plan is in hospitality.
And how long are you seeing this expansion being taken place in? What time horizons or timelines are you working with?
It's within 3 years.
All right. Also, sir, if you could give us an update on the stake sale in your hotel portfolio business, how are you going about that? And is this to do with funding coming through for your other projects?
Yes. So, see, we have already signed NDAs with couple of people, and discussions are going on. So we will try to close it as fast as possible. Yes, this funding is for growth capital, for growth of the hospitality business.
Mr. Goyal, good afternoon. Would you believe that in 3 years' time or thereabouts, your leasing and your hospitality portfolio would be a lot higher in percentage terms for the company as compared to the pure play realty portfolio, as in sales residential portfolio?
Definitely.
Is there a target that you have internally set up, and why would that be the case?
See, we have set up a 1,000 crores revenue from leasing, and around 600 net, around 600, 700 from hospitality. So I think these both business should be around 50% of the total which goes on. If residential does, I think it should be portfolio.
Okay, slightly patchy network, but I'm guessing that about 1,600, 1,700 crores of the non-real estate sales portfolio is what Mr. Goyal is talking about. Yes. Would that, I mean, so why this conscious strategy, Mr. Goyal?
See, as you know, residential is a side business, and so it gives a company a steady flow income during the bad times, and that's why we have been strategizing that we should have a good leasing portfolio and of course hospitality portfolio to cover our residential sales.
Interesting. I have one small other question. I mean, if we just look at how people are looking at residential or real estate companies right now, and the belief is that the market capitalizations of companies are currently not pricing in the fact that the revenue models of these companies are changing dramatically, and in 3-4 years time the well-established names could have a revenue run rate or revenue number which is 2x or 3x the current revenue numbers as well because of consolidation in the industry. One, do you think that's that sounds a reasonable estimate? And two, would that happen for southern companies as well?
Yeah, see that this is a pan-India phenomenon. After advent of RERA and GST, big organized players have been doing very well, and unorganized players there has been consolidation, and this consolidation will continue in next 2-3 years in North and Mumbai. It has already started. South it is slow, but it is starting now, and I think in 2-3 years you are right, revenue potential will be higher.
From 2,700 crores, I presume, which is the expectation that I think you laid out and brokerages lay out as well for 2019 or FY19, what's a number that one can expect, if not in FY21, then in FY22 or FY23? Ballpark estimates out here.
See, I'm not.
Can the size
go
up?
I'll not give any guidance on that.
Yeah, but can the size go up 2x from where it is right now in 2-3 years?
Yeah, definitely. We are aiming for that.
All right, Mr. Goyal, the last time we spoke to you, we also saw a little bit of an increase in your borrowing costs. If I'm not mistaken, your debt still stands at about 1,000 odd crores. If you could give us an update on that, and as well as whether or not there has been any change in your borrowing costs, even for perhaps in the recent times.
Yeah, see, last time in half-yearly quarters, we had reported borrowing cost of around 9.33%. So yes, some borrowing cost has gone up. So the interest rate has been going up, and after this NBFC issues, rate overall in the market because of the liquidity crunch has gone up. We don't have much exposure in NBFC, but I think our rate will be around average rate should be around 9.4, 9.5 by this quarter end.
All right, sir. And just a word on, if I could say, the borrowing for housing at this point in time. So I'm sure that a lot has changed over the last few weeks. How are you seeing that scenario change? Again, last time you spoke to us, you had suggested there is no liquidity crunch. At least as far as borrowers are concerned, they are all right and good to go. Would you say the situation is more or less the same?
Yeah, it is more or less same for good developers. BC, the issue is only on NBFC, not on the banks. So we generally take construction finance, and which is available with banks now. And we are getting residential construction finance at around 9.7% now. So we are comfortable in liquidity.